This is Horizon's Middle East and Africa, our top stories this morning. French President Emmanuel Macron says he is open to cross-border M&A for the future prosperity of the EU. He speaks to us exclusively.
We need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality.
Japanese bond yields surging to decade-plus highs on bets the Bank of Japan will further reduce debt buying to ease pressure on the ailing yen. Plus, we are live at the Qatar Economic Forum starting today, and our stellar guest lineup begins this hour with UN Assistant Secretary General Ahunna Eziakonwa. Well, it's just gone 8 a.m. across the Emirates. It is 7 a.m. in Qatar. I'm Joumanna Bercetche in Doha. Well, we are here at the Qatar Economic Forum, which begins today. More than 1,000 business and government leaders are here this week for discussions on the issues now dominating the global agenda. That includes geopolitics, of course, trade, money flows, the energy transition, and technological innovation in chips and AI. Some of the global heavyweights we will be speaking to include the Qatari, Polish, and Malaysian prime ministers, the Saudi finance minister, and the president and CEO of Franklin Templeton, Jenny Johnson. And today, I myself will be moderating panels discussing the future of Middle Eastern economies, as well as AI and reinventing banking. And that is just day one, everybody. We have got a packed day coming up. And by the way, lots of people have been asking me how you can watch these panels. If you go to Bloomberg.com, there is a live stream available if you want to tune in to any or all of the panels. All right, let's get a check on markets and how they are faring. We are sort of trading sideways for these S&P futures at the close, leaning towards unchanged. But of course, we have a lot of major events coming up. PPI today, CPI tomorrow is going to be the big one for markets. Keeping an eye on the Hong Kong market as well. You can see HS Tech is up almost 1%. Big focus for big tech earnings coming on later this week. Tencent, Alibaba on the radar. 20-year JDBs, also interesting. You can see the yield is actually about 4 basis points higher today, 1.77%, the highest level since 2013. Some hawkish expectations coming through from the Bank of Japan. We're going to talk about that shortly with Avril. And then, as ever, keeping a close eye on Brent. It is sitting at around $83. One stock, well, I didn't think I'd be talking about this today, but here we are. We are back to the days of roaring kitty, GameStop. Lots of price action in that stock yesterday, ending the day almost 80% higher. And you can see from that chart there, this biggest one-day change since the early days of 2021. And we all remember the meme stock mania back in 2021 and how much excitement there was around GameStop and others in that space. Well, there's lots of expectations now that perhaps we could see Roaring Kitty himself come back to the market, which fueled some of the rally and excitement. Many circuit breakers in trading throughout the day yesterday. But enough on GameStop. Let's check in on how markets in Asia are faring. Avril is in Singapore. Big tech in focus, of course, Avril, but then some hawkish expectations once more for the Bank of Japan this week.
Yeah, we're keeping a close eye on those Chinese tech names, the Tech 8s, Chinese equivalent of big tech, and it is a fairly muted picture in the Asia Pacific. The trading volumes are lower than are typical this time in the trading session as we keep an eye out on US CPI, but also those Chinese earnings. And it's really going to be about whether their scorecards can justify their lofty valuations. That's going to be a key test, not just for the companies Tencent and Alibaba, but also for the Hang Seng. Let's take a closer look at what we're seeing in the Japanese bond space. The sell-off continues today on the 2, 5s, and the 10s. The yields are the highest in more than a decade. And this is after the BOJ reduced bond purchases yesterday. And that's sparking the speculation that it's going to start speeding up the pace of monetary normalization to support the Japanese currency. Despite all this, is not doing very much for the yen, still hovering at that 156.4 level. Joumanna.
It's been so hard to get the yen stronger. Avril, thank you for giving us an overview of what's been happening with those Asian markets. Well, more now on the Qatar Economic Forum. Of course, we are here in Doha, and the forum begins today. Very happy to say that Stuart Livingstone-Wallace, who heads our news coverage in MENA and Russia, is here with us for a preview. Well, as you know, it is my first Qatar Economic Forum, and I've got to say I'm very impressed at the breadth and the depth of the panels that are going to take place the next couple of days. You've got to think, though, that geopolitics are going to be high on the agenda.
It is. And what you can see behind us is no reflection of what this is going to look like in about an hour.
It's very early.
You're not going to be able to move, and I have to say that unless you're here, it's really hard to get a sense of the scale of the event. And they're not here for the sunshine, although maybe some of them are. They're basically here because Qatar has become one of the global centres of power. So you've seen over the last several months the Prime Minister, who's going to be on stage fairly shortly. You've seen his face just about everywhere. He's been deeply involved, and the country's been deeply involved in negotiations between Israel and Hamas. But beyond that, they've been involved in so many different geopolitical issues. You know, and if you think about the size of the country, the size of the population, they punch way above their weight.
Yeah, well, also the U.S. military base being here as well. So the geopolitical perspective is going to be interesting. And, of course, John Micklethwaite will be sitting down with President Duda. So something to think about there, not just particular to the region, but broader Ukraine, Russia as well. One other theme, obviously, that's going to come up, I'm moderating a panel later about reshaping Middle Eastern economies. And you talk about the power, the geopolitical power that many of these countries play, but also you have to think about their economic clout as well, and just how many deals are going on here and how many business executives are flying in to have conversations about funding, investment opportunities. And I think that's also going to be a big thing that comes up as well, isn't it?
Yeah, it's the two M's. So mediation, number one, they're really good at that, but it's money. And the money is being deployed on a scale that I think we've never seen. So if you think about what's happened to the world of finance, basically this region is starting to become one of the central bankers of the world, in effect. So they're involved in everything. They're doing deals in technology, in healthcare, in sports. That's going to be another big theme for us this year. And fundamentally, it's drawing business in from everywhere. So yes, the energy companies are going to be here, the Exxons and the Totals and so on and so forth. But beyond that, you're getting all the bankers are coming here. The hedge funds are moving here, to the region. And it is becoming a centre of power. And it is going to influence really what happens in the world of finance over the next couple of years. You know, the effect is profound. The change in money flows is profound. And that's why we're going to have, whatever it is, more than 1,000 of those leaders show up here to talk to each other.
It's going to be absolutely fascinating to that point. I've also got a panel about tourism and what Saudi and Qatar are doing to attract more tourism. Qatar, obviously, post-World Cup, it's a big question. I did mention President Duda was going to be here, and we are also keeping an eye on developments in Russia, Ukraine. Secretary of State, U.S. Secretary of State Antony Blinken has just landed in Ukraine. We've got to keep an eye on the situation there with the Russia counteroffensive once building up, momentum again. What is the purpose of Secretary of State Blinken's trip right now? I
mean, I think more than anything else, it's a PR job, and I don't mean to diminish the importance of that visit by saying that. He's not coming with anything concrete, but he's there really, I think, to show support. So we saw that huge new package come out of the US. That's going to take some time to feed into the battleground. Now, the US officials are saying some of that equipment is already arriving. But the reality is it's going to take several weeks for it to get there. In the meantime, they need to hold the line. So you've seen this big new offensive in the north aimed at Kharkiv. Now, I don't think that's going to necessarily make its way there anytime soon. But again, it's about shoring up that support, making it clear to the Ukrainians, look, we are here, we're on your side, we've got your back.
And to your point, Congress did pass that $60 billion aid package for Ukraine, but it will take time for the aid to arrive. So, yeah, big focus for us. Stuart, thank you so much for giving us an overview of what's coming up the next couple of days. That was Stuart Livingstone-Wallace, head of our news coverage in MENA and Russia. Now, the French president has used a trade summit in Versailles to unveil more than $16 billion in foreign investments from companies including Amazon, Microsoft, and Morgan Stanley. Emmanuel Macron spoke exclusively to Bloomberg editor-in-chief John Micklethwaite, who began by asking him about Total Energy's recent threat to move its primary listing from France to the U.S.
I wait for any confirmation. I understood it was rumors, so
But it's interesting that it's tied to the idea that he would face extra ESG measures here that he would not face in America. And he thinks that would affect his valuation.
Do you mean that we are more serious than the US in terms of green economy and transition?
Yes, but you also, in your speech at the Sorbonne, you said, as I'll paraphrase, you said you cannot let decarbonisation and growth be enemies. And this would appear to be an example.
And this is my point.
Yeah.
But the point is just, we have to be sure when we regulate, we should not over-regulate.
Yes.
And I think now we have to deliver. We need in Europe much more investment. We have to cut red tapes, have more flexibility. But in parallel, everybody has to be serious. I saw a lot of funds, a lot of asset managers saying, we are with you on climate change. Where is the beef? Are you sure you are sufficiently compliant? Are you sure you are clearly addressing the same issues? This is my point. And this is why we need a resynchronization between the US and Europe. The resynchronization is, number one, the US regulation in terms of climate change should be more serious and realigned than the European ones. Second, the Europeans have to invest much more and be more serious and realign themselves on the US.
If I look at all those people, or certainly Hermes, LVMH, Kering, all those ones, they have done spectacularly well by exporting to places like China. They've done very well out of globalization. And all the prescriptions you were just talking about in terms of Europe having higher trade walls, being tougher with China, you know what will happen in a couple of months' time? The Europeans will say, we want to put tariffs on electric vehicles. And what will happen is Mr. Xi, despite what he may have told you last week, he will come back and he will put tariffs on cognac. And that will help those very successful French business people.
Look, I think this is exactly the mistake we made 20 years ago on solar panels, and we killed our industry. I'm very simple. I don't lecture and blackmail anybody. I just look at the picture. When you have tariffs of 10 for Chinese electric vehicles entering into our market, and when you are taxed between 15 and 24 when you go to the Chinese market, you have an issue. And on all the different sectors, what we want is just reciprocity. We want, and in fact, more than that, more just than regarding the relation with China, level playing field. So what we ask for is exactly that. We want to be sure that in terms of tariffs, subsidies, rules of production, we have a fair competition. And I mentioned it very openly to President Xi. So it is not a geopolitical agenda. We don't want to blackmail and push back some of their production. We want to be sure it is fair. It's fair to launch precisely inquiries and look in details at the situation and revise it. If we are weak, if we are threatened by the fact that you can have retortion measures, you just don't do what you have to do. We had this discussion, and this is why they decided not to implement the first measures on cognac, but to withdraw the first one. So I think it's a normal approach, but look at the situation today. The European Union is the most open place of the world. But you cannot survive if at the same time you have subsidies and overcapacities in China and protection in some part of the market, and Inflation Reduction Act and Buy American Act in the US. It doesn't fly 1 second.
So Europe has got to get tougher now.
But this is a necessity, not because we are protectionists, but just because we want to protect our economy.
The Germans do not agree with you about a lot of this.
I think it depends whom in Germany and for which perspective. It's totally true that some German companies, when they are incorporated in China, for instance, benefiting from subsidies, not just German, European, American, their interest is probably to preserve that and to sell themselves their overcapacities in China to the rest of the world, and especially the European market. But the German economy's interest is totally aligned with the French economy's interests, meaning creating jobs, creating value, but just protecting your business and your people when they are attacked by unfair measures. And it's normal. It's part of the business. So for me, it's just a no-brainer.
Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Doha. Goldman Sachs expects IPO activity to pick up in the second half of the year and continue into 2025. In an exclusive interview, Chairman and CEO David Solomon told us it's concerning that companies are staying private for longer.
I do worry that the structure of the equity markets, particularly in the United States, but this is true all over the world, are bringing fewer and fewer public companies, and that is concerning. There's obviously an abundance of capital available in private markets, but I do think it's important that we have open, accommodative, strong public markets. There's tremendous disclosure, transparency in public markets. I think that's good for capital deployment. And, you know, I am concerned that the breadth of the public markets is getting a little bit more narrow, and I think that's something for us all to watch and think about.
You've got visibility on the pipeline. Do you see that improving at all?
Well, it's easy to improve when it was zero, so the IPO market closed. It has opened up. We've seen some very successful IPOs during the course of the first few months of the year. I think the level of IPO activity will pick up in the second half of the year into 2025. It's not going to be as robust as it was during 2021, but I think we'll move back to what I'd call a more normalized environment for IPOs. That said, the overall size or number of companies coming public, companies are staying private longer, they have more access to capital, and that's something I think it's important for us to think about. There are consequences associated with that.
Let's think about M&A as well. It's difficult in my position to understand which deal can get done and which deal can't get done based on current regulation. Tapestry, Capri, apparently that's a problem. Other deals can go forward. How much is that holding back M&A activity in the United States?
I think there's no question that the regulatory environment has been a headwind to M&A activity. I'd say, for example, large cap tech has kind of closed out because of the regulatory environment for making significant acquisitions. And I do think the regulatory environment has made it harder to understand or really expect exactly how it will intervene. And so I think that's had a chilling effect. That said, the world's a competitive place. Scale matters everywhere you turn. People are going to do what they need to do strategically to advance their position. And if they have to litigate it, they'll litigate it. Generally, those companies that have chosen to litigate have generally made progress. Nobody wants to go down that path. But I think at the end of the day, scale matters and confidence matters. And so confidence has been improving over the last 12 months. Certainly in 2022 and 2023, you didn't have high CEO confidence. That affects M&A. But based on the indicators that we can see, some that are visible, some that aren't, I think dialogue's picking up, and my guess is we'll move back to what I'd call more normalized levels as we finish the year.
Fascinating conversation there. Goldman Sachs Chairman and CEO David Solomon speaking to Bloomberg at the Choose France Summit in Versailles. Also coming up, Bank of America Chairman and CEO Brian Moynihan shares his outlook for the U.S. economy as well. That exclusive interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Doha. Staying with Bank of America, CEO Brian Moynihan says U.S. consumers are still in good shape despite elevated interest rates. He told us even after easing begins, the Fed's terminal rate is likely to be much higher than we've seen in decades.
People are getting used to it. But the reality is at some point the Fed has to bring the front end rate to get to a normalized curve, because an inverted curve forever doesn't sort of economically compute. But I think our team thinks that the terminal rate, the end rate that they'll get to will be more in the 3.5% range as opposed to 50 basis point range or 1% range. And we haven't really had that since before the financial crisis. There was a moment in 16, 17, 18 where they raised rates and they already started bringing them down to 19. So frankly, in our team, I say, if you're under 40, you've never seen this kind of rate environment. And this is normal. And so 3% front end, 3.5%, 4.5% 10-year, and people will get used to it because America did a lot of economic activity prior to 2007 for the 200-plus years of existence. So people have been used to it. It's just that we're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We're hearing from some companies that maybe there are some cracks. We heard from Starbucks, McDonald's offering a similar view on the US consumer. You've got some 69 million customers. What do you see? Do you see those cracks at all starting to emerge this year?
So if you think about it, where would the cracks emerge? You talked about the average account balances. They're still, especially for households 75, 100,000 and below, the account balances are higher than the pandemic by a lot. If you think about the spending settled into a more normal, where it was in 16, 17, 18, the Fed was raising rates, inflation, they're pushing, inflation was higher, they're pushing it down or holding it steady. So that's normal. And then on the credit side, we're just normalizing to where we were in 19. So in 2019 was a 50-year low in credit costs in our company, and basically last quarter we were a little bit higher than that. And so we're normalizing, so it's increasing off a base. If people say, oh, your charge-offs are going up, but they're getting back to where they were in 19, and frankly, people thought that was very good credit, and it factually was. And so the question is where they go next. The good news is we're starting to see delinquencies flatten back out, i.e. they're not growing anymore. They normalize, and then they're staying. That's good news on the consumer side. So it's all okay. It's just higher rates are tough on people on the mortgage market. Mortgage originations are way down. Higher rates are tough on corporations using the lines a little bit less because, small, medium-sized companies, because it costs more. And if it costs more, you're going to be more judicious about it. So that kind of adjustment, what the Fed is doing with rate structure is having the impact they want. On the other hand, the economy is kind of there, and now we got to be careful we don't overshoot the other way. And right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing. But that's been pushed out to when it occurs, and we got to be careful that we don't overshoot, because you see the consumer confidence numbers tipping down a little bit. That's what you got to be careful of. If the consumer leaves the game, it's hard to get them restarted.
That was Bank of America's Brian Moynihan speaking exclusively to Bloomberg's Jonathan Ferro in France. Now for a look at some other stories that we're following. This one is a big story from the region. Emirates has reported its best ever financial performance, with group profit for the fiscal year surging by 71%. Profit at the airline business rose 63% in the financial year ending in March as long-haul travel continued its rebound from the pandemic. The CEO, Ahmed bin Saeed Al Maktoum, says he expects customer demand to remain strong in the coming months. And for those of you who've been looking into the details of this story, I thought it was really interesting to note that because these earnings were so strong, they have decided to award their employees a 20-week bonus. Very nice for some. A reflection of how well the airline is doing. All right, another story that we're keeping a close eye on. Anglo American has rejected a second approach from BHP that valued the miner at $43 billion. The takeover would have made BHP the world's largest copper producer. BHP had raised its all-share offer, but it maintained a structure that Anglo had already branded as unworkable, making it hard for the company to agree to talks under those terms. Well, we got plenty more coming up from the Qatar Economic Forum, and do not miss our exclusive conversation with Ahunna Eziakonwa on Africa's 2030 vision coming up next. This is Bloomberg. Welcome back. This is Horizon's Middle East and Africa. Our top stories this morning. French President Emmanuel Macron says he is open to cross-border M&A for the future prosperity of the EU. He speaks to us exclusively.
We need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality.
Japanese bond yields surging to decade-plus highs on bets the Bank of Japan will further reduce debt buying and the ailing yen. Plus, we are live at the Qatar Economic Forum starting today, and our stellar guest lineup begins this hour with UN Assistant Secretary General Ahunna Eziakonwa. Well, it has just gone 8:30 a.m. across the Emirates. It is 7:30 a.m. over here in Doha. Let's get you up to speed on how some of these markets are faring. Taking a look at the price action yesterday, we had the S&P leaning in towards a flattish close. You can see on the board today the futures are also pointing to a flat open as well. Hong Kong tech index very much in focus. We saw a bit of a jump overnight, up 1%. Of course, a lot of focus on big tech this week. Some of the earnings coming up. Tencent, Alibaba. 20-year JGB is also in focus, up 3 basis points. 1.76% is where we are at right now. April's going to give more color on that, but there are expectations that the Bank of Japan may start to reduce the bond buying in that part of the curve. Brent always in focus as well at around $83, hanging in there, but of course much lower than where we were when those geopolitical risks started to emerge. Quick look at our one terminal chart of the day, and you can see that GameStop is back in fashion again. Huge amount of trading activity in the stock yesterday. It ended the day almost up 75%, its biggest one-day gain since the early days of 2021, when meme stock mania was the rage, was the theme. A lot of excitement with expectations that Roaring Kitty will come back to the market again after posting a picture on his Twitter, on his X, that sort of spurred the market into action. We saw multiple circuit breakers go through, but does tell you that many people, many retail traders are once more excited about the potential of meme stocks. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio standing by.
Yeah, Joumanna, we're seeing Asia's stock gauge flat ahead of the US CPI print and as we watch for those Chinese tech earnings. But I wanted to draw your attention to what we're seeing on dollar yen as well, because after a couple of weeks ago, what was thought to be intervention has been moving back up to the 160 level. And the weakness in the yen comes despite the shrinking yield gap. It's been shrinking even ahead of the bond sell-off that we've been seeing in Japan this week. One possible explanation for this might be that currency traders are more focused on the short-term rates and whether or not the BOJ actually goes through with another rate hike. So we're seeing dollar yen not quite supported despite that shrinking yield gap. Flip the board. I want to show you how other currencies in the Asia Pacific are faring, as the rupiah is leading the declines in the session today, and we're also keeping a close watch on dollar China on a 3-session losing streak. It's not just about US CPI, it's also about the looming threat of China tariffs, Joumanna.
Avril, as ever, thank you for giving us an overview on some of the big drivers for Asian markets this week between the Bank of Japan and those big tech earnings. Now, Treasury Secretary Janet Yellen says China could always retaliate against any steps the U.S. takes to protect its critical new industries. But Yellen declined to confirm Bloomberg reporting that the Biden administration is about to hike tariffs on Chinese goods, including electric vehicles. But she told us exclusively that the president is thinking about the trade tensions.
He believes it's unacceptable, as I do, to be completely dependent on China in these areas. And he wants to make sure, given that China is really not playing by the rules in the sense they have enormous subsidies in critical areas of advanced manufacturing, has resulted in overcapacity. He wants to make sure that the stimulus that's being provided through the Inflation Reduction Act to support these industries, and these are industries that are creating good manufacturing jobs in parts of the country that have been overlooked or have suffered from deindustrialization in the past. The president wants to make sure that he protects these investments. And I don't want to get ahead of the 301 review on tariffs, but this is a commitment that President Biden has made, and I agree with it. I was in China just a couple of weeks ago and made clear that we would not allow Chinese overcapacity to harm our emerging industries.
Does the U.S. want a trade war, though, with China?
We believe that we should have a deep and productive, and that we do in most areas, trade and investment relationship we're working to stabilize our economic relationship. We do not wish to disengage from China economically, but we do think that the playing field should be fair. And China engages in unfair practices like massive subsidies of industries they've decided are critical. And those are cases where we will act to protect ourselves.
We've seen Beijing in the past, though, respond, and it's become tit for tat. Are you expecting a response? Could they go after Tesla or maybe American farm products?
Well, President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully we will not see a significant Chinese response, but that's always a possibility.
Well, that was U.S. Treasury Secretary Janet Yellen speaking exclusively to Bloomberg's Anne-Marie Horton. Also coming up, our exclusive conversation with Ahunna Eziakonwa on Africa's 2030 vision. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche here in Doha. Well, you may be wondering why I'm in Doha, but of course we are here at the site of the Qatar Economic Forum, which begins today. More than 1,000 business and government leaders are here this week for discussions on key issues currently dominating the global economic agenda. Now, my co-anchor and our Africa correspondent, Jennifer Zabasajja, is here with us. Well, first of all, can I just say what a delight it is that we're both together in the same place for once.
It is nice to be here with you, Joumanna, and you can feel the energy, so I really appreciate you letting me come on the show today.
No, fantastic. Well, there's so much going on here with the Qatar Economic Forum. I've got to say, I personally am really looking forward to many of the conversations that are going to be taking place. Obviously, today is going to be dominated by geopolitics. We've got President Duda. We've got the Prime Minister of Qatar speaking in a short while. And clearly, as we were speaking about early on the show, Qatar is playing an increasingly influential role when it comes to geopolitics. But of course, the economies of the region as well, in the GCC, playing an increasingly important role in terms of deal-making and business activity.
Yeah, and I mean, you mentioned deal-making. I'm coming from the African region, from Johannesburg specifically. The GCC is a big investment player when we think about Africa and we think about development. And so it's going to be really fascinating to see some of the deals that are made, potentially some of the discussions that are further progressed during the next few days, which turns us to our next guest. We want to focus on sustainable development in Africa, and we're very pleased to have our next guest on set with us. She says she's looking forward to discussing investments that can bolster innovation and development financing. So let's bring her in. She is Ahunna Eziakonwa, the UN Assistant Secretary General and UNDP Regional Director for Africa. Ahunna, thank you so much for being here at QEF with us. So let's just start with the theme of QEF. It's titled A World Remade. When we think about Africa and we think about remaking the region, I mean, how is the UNDP supporting the region, and how do you see the GCC and others supporting?
Yeah, no, thanks so much for having me. It's great to be here. You know, we don't think that it's possible to achieve the 2030 agenda of Sustainable Development Goals in Africa without a rethink about the financial flows for development. And we know that there is currently a gridlock. African countries are not getting the resources and the support that they need to advance development goals on the continent. So very important conversations here in the next few days to really understand how we're going to break this gridlock. Money is much more expensive on the market. Aid is not enough. It's important still for a number of countries as a catalyst, but we need to leverage much more resources to finance infrastructure, for instance, and the development sector as well, the social development aspects.
Well, you know, just to pick up on the financing aspect, we are in a much higher interest rate environment. And I think it's really interesting to note, if you read some of the reports being put out by the IMF, that the number of low-income countries going into debt distress keeps on rising. And I just wonder, to what extent some of these lower income countries or some of the nations in Africa will have the fiscal firepower to spend socially on these social spending projects if there is such a large overhang of debt. It almost seems like you have to do something about debt reduction in order to unlock the ability for these countries to start spending on inclusive growth projects.
Absolutely, and those are some of the areas that UNDP is working on. The UN Secretary General as well has called for a restructuring of the global financial architecture, because right now it's not really favoring developing countries in terms of addressing the development deficits that we have. So debt is one area. The cost of borrowing is extremely high for African countries. UNDP did a report last year which showed that 16 countries that we surveyed that have been rated in terms of their credit worthiness were actually losing up to $75 billion a year as a result of non-objective rating. You know, the perceived risk in Africa is so high that, you know, when the data comes in, it puts these countries always in the junk pile. And that's not always fair, you know, so the cost of borrowing has to go down. UNDP is working on that. We're trying to bring more data to bear on the, you know, analysis that are done by credit rating agencies, but also to provide advisory services to the countries in terms of their ability to actually position their countries better. Debt management is another one. You know, it has to be much more sustainable, and it's important also to know that African countries are borrowing, for instance, to address climate change, and that is not a fair deal. You know, climate change is largely caused by developed countries, so climate financing has to come in there to support countries and reduce the borrowing.
Take us into some of those conversations, Ahunna, because I know you just came back from the U.S. You're based in the U.S., but, I mean, you say you're an advisor to a lot of these governments. I mean, how are they responding when you do talk to developed countries and developing countries?
Well, I mean, the first thing is African countries are realizing that obviously they need to do a lot more on domestic resource mobilization. It's a continent that actually generates a lot of resources, but most of it is lost. It's not mobilized for Africa's development. So in UNDP, we speak a lot about Africa's money for Africa's development. So that's the first thing. Look inside and see where, you know, you're going to plug the holes in terms of where there's a lot of leakage of the resources that are generated but not mobilized for development. Tax, for instance. So we're working to look at tax. We have a program called Tax Inspectors Without Borders, and it's really to capacitate the countries to collect better revenue from taxes. But also remittances. This is a huge source of financing for African countries, but it needs to be directed more towards business investments rather than just pure consumption, which is what is dominant in the remittance world right now. But also we are talking about areas like innovative financing. That's another thing that African countries are looking to raise in bonds in the market, green bonds, diaspora bonds, for instance. Some countries have been quite successful there. So domestic resource mobilization, huge. But then external financing as well, you know, and that's where we're looking at the changes that need to happen in the global financial architecture. So, special drawing rights. This was something that was released by the IMF for many countries that were suffering from the impacts of COVID-19. But African countries got only a small amount of that. And now the call is for some of that money to be redirected to Africa and developing nations because they needed more than the developed countries who actually got a lion's share of that.
Well, I want to go back to something that you said that's stuck out to me now with respect to climate financing and the effects of climate change. And I think it's interesting to know that, you know, at COP earlier this year, the plan for a loss and damages fund was envisaged. And even though it's not operational yet, the purpose of it is to compensate countries that are feeling the effects of climate change. And you say that, you know, unfortunately, it's not Africa that was responsible for most of these global emissions, and yet it is many African nations that are bearing the brunt of the extra CO2 that has been emitted to the air. So how do you quantify it? And what sort of an impact do you think the fund is going to have on the African continent?
Well, first, I think it's important that it was agreed to. The decision was finally made at COP28. The money is not as much as we would like to see. I mean, it's just under $1 billion, and much more is needed. But it needs to be operationalized, and we need transparency and accountability in terms of how countries access these funds and, you know, how they invest once they are accessed. But also, it's important to understand that the Loss and Damage Fund is only complementary to climate financing. You know, countries promised in Paris $100 billion a year for developing nations on climate finance. They're not seeing that money yet. And we actually believe that the polluter does have to pay more because the impact is huge on many African countries. We're seeing more extreme weather conditions that are completely wiping out the gains of development and setting countries way back. So this issue of climate financing is a justice issue, and it needs to be addressed. And loss and damage is a big part of it, but it isn't only. And so we shouldn't use loss and damage to mask the greater amounts of resources that need to come into climate financing to support countries, you know, shore up their economies and become more resilient. So it's not just about mitigation, it's also about adaptation. And Africa has a very clear adaptation fund that is, you know, it's portfolio programs that need to be implemented, and that needs financing.
And Ahunna, let's just finish on innovation, because you touched on that briefly. I know that's something very important to the UNDP. There's this Timbuktu Fund, right, that you launched earlier this year. Can you talk about, in terms of, are you planning to increase that fund, and where is it going to? How do you make sure it doesn't go to just the few African countries that get investment for innovation and startups?
Well, that's why UNDP exists, and that's why Timbuktu, because if you look at the numbers currently, you know, actually a lot of the investment in startups is going into one or two areas, fintech being the top one. And we think the opportunity is really huge on the continent in terms of the various sectors that could use more financing for startup to boost the startup ecosystem. So Timbuktu comes on stream to expand that space. So beyond fintech, we're looking at agri-tech, we're looking at edutech, we're looking at health tech, creative techs. I mean, there's a burst of talent on the continent around creatives, whether it's fashion or films. All of these need support, and Timbuktu is really coming to create these verticals across the continent, which will be pan-African, and we have a major de-risking component so that investors will feel more comfortable to come in and invest in these startups. The youth on the continent, I think it's almost like a miracle to see the level of talent that is there, but not enough opportunity, and that's the gap that we're trying to address through Timbuktu.
Well, fascinating and very inspiring conversation. The work that you do on the ground is absolutely inspiring. Thank you so much for joining myself and Jennifer today on our show. That was Ahunna Eziakonwa, UN Assistant Secretary General and UNDP Regional Director for Africa, and our very own Jennifer Zabasajja over here in Qatar Economic Forum. You got plenty of panels coming up.
Yeah, you do too. I'll see you again.
We're busy ladies. All right, also coming up, UK ministers and business leaders are descending on Saudi Arabia today. We're live in Riyadh next. This is Bloomberg. Welcome back to Horizons Middle East and Africa, everybody. I'm Joumanna Bercetche in Doha, and you can probably hear and see things are beginning to ramp up here at the Qatar Economic Forum. We're about a couple of hours from the launch of the event. In other news, Saudi Arabia and the UK are holding a joint summit in Riyadh today as both countries look to boost their economic ties and promote investments. Executives from HSBC and British Airways will be among more than 450 British delegates attending. So for more, we're joined by Bloomberg's Saudi Bureau Chief, Christine Burke, in Riyadh. Christine, just give us an idea of what this summit is aiming to achieve.
Well, so today kicks off this summit, which is going to be hosted over 2 days. It's actually being called the Great Future Summit, and really it's aimed at deepening this relationship that we've seen growing between the UK and Saudi Arabia. The UK says that the delegation that's going to be here on the ground in Riyadh today is actually the largest delegation that has taken to an international event in more than a decade. I think the idea is really to bring these British companies to Riyadh and show them the economic transformation that is happening here on the ground so that they understand the scope of work that they can possibly win. I think the UK is also looking to draw more investment from Saudi Arabia into the UK and vice versa, with Saudi Arabia drawing money from Great Britain. In terms of what we're expecting and who is there, Deputy UK Prime Minister Oliver Dowden will be joined by 5 UK ministers. We're also expecting to hear from a number of Saudi officials. As you said, we'll see executives from HSBC UK and British Airways. Amanda Staveley from PCP Partners is also going to be here. She already has really strong ties with the kingdom. And I think beyond that, we know that the UK and Saudi Arabia are expected to announce an MOU this morning, and we'll be looking for development in AI and potentially in the education and financial services space.
Yeah, so many different sectors. Chrissy, it's wonderful to have you on our show. That is Chrissy Burke, our Saudi Bureau Chief in Riyadh. Well, we're wrapping up here for the show at Qatar Economic Forum, but as we've been talking about, there's so much more to come, from geopolitics to artificial intelligence to the future of many of these GCC economies. This is Horizons Middle East and Africa. I'm Joumanna Bercetche in Doha.